Hello, folks. It's Friday, October 18th. It's about 10:30 in the morning on the West Coast of the United States. Let me share my screen here and we'll get going. Share my screen here. There we are. In this video, I am going to be focused on gold IRAs versus gold ETFs. This is one of the questions I see asked out on the internet, and so I'm going to spend some time clarifying the difference between those two vehicles. Let's jump right in. So my objective in this video is to clarify and emphasize the difference between paper assets and tangible assets. And so in a gold IRA, you're investing in physical gold, silver, platinum, palladium, all four, any combination of those four metals inside a gold IRA, tangible assets. And then there's a bunch of other gold investments that are paper gold investments. And so I want to clarify the difference between paper and tangible assets. And the difference in the two, the key difference that I see when we're talking about paper gold versus tangible gold, it's the ownership of gold. I'm going to physically own gold, or I'm going to have exposure to the price of gold. And both of those are valid investment objectives. There's nothing wrong with one or the other. Neither one is better. Well, I'm a gold bug, silver bug, and so I favor physical ownership over paper ownership. But both ways of having exposure to gold are valid in investment objectives. What's important is for you to be clear on the concept, the difference between paper and tangible gold, and make sure that the way you are investing your money in precious metals aligns with your objectives. Do you want exposure to the price of gold? That's the paper. So paper gold is going to give you exposure to the price of gold, whereas a gold IRA or outright ownership of gold, that will give you physical ownership of gold. So let's keep going. And two of the key differences when we're talking about or we're differentiating between paper gold and tangible gold is, does the ownership of the investment vehicle give us diversification away from paper assets? And if we look at a gold IRA, well, yes, because we are owning a tangible, we're investing in a tangible asset, physical gold, that is a diversification away from paper. And think about the typical investment portfolio, the 60-40 stocks and bonds. All of that is paper, stocks, bonds, mutual funds, ETFs, all of those are paper assets. Physical gold is a tangible asset, or silver, platinum, palladium. So gold IRA does allow us to diversify away from paper assets and from diversification away from traditional assets, the 60-40 portfolio. There is third-party risk. Now, a lot of people would tell you that a gold IRA, oh, there's no risk because you're investing in physical gold. Well, it is true. It is true that physical gold has zero third-party risk. But as soon as you store that gold with a third-party custodian, well, now you've introduced risk into the equation, because that custodian, things could happen, hurricanes, force majeure, they throw it all in a suitcase and skip town. So the IRS requires with a gold IRA that the physical gold is stored at a third-party custodian. And so that custodian represents risk. Let me point out that all investments represent risk. There is some level of risk with all investments, doesn't matter what you're talking about. Even physical gold that you own directly, there is still risk. It can be stolen, it can be lost. etc. So it just doesn't matter what investment you're talking about, there is risk. One of the objectives as investors is to minimize the risk that we take with our investments, and then also to understand our own level of risk adverseness. And so, you have to be able to sleep well at night. And so if you are risk adverse, you want to invest in low risk options. And so anyway, I wanted to point out that there is risk involved in a gold IRA investment because of that third party custodian, which that's an IRS requirement. There's no way to get away from that. So when we start talking about paper investments in gold ETFs, gold trusts, gold mutual funds, etc., those are paper investments. And so there's no diversification from the paper versus tangible asset perspective. You could argue that you are diversifying away from the traditional stocks and bonds because you're gaining exposure to the price of gold. So, but it does not give you diversification away from paper assets. And clearly there is third-party risk. When you start talking about these paper gold vehicles, they're money managers, investment banks, hedge funds, mining companies. There's lots of third-party risk involved in paper gold investments. So that's something to be aware of, the level of risk in a paper gold exposure to the price of gold or a physical investment in gold, tangible gold. So these are two common, these are questions that people ask on the internet: physical gold versus a gold ETF, or a gold IRA versus gold ETF. And as I've been saying, in either case, we're talking about different ways to invest in physical gold. Because even when we are talking about gold ETFs, the gold-backed ETFs in particular, there is physical gold involved. And so these questions, people are really getting at different ways of investing in physical gold, or at least I believe that is their intent. When they go on to Google and they type these as a search, they're investigating the different ways to own physical gold. And that's what I'm clarifying in this video, or I hope that I am clarifying in this video. So, which that brings us to how to invest in physical gold. And in my mind, there are three significant differences to be aware of and to focus on. So the type of money that we use to purchase that gold. So we've got basically two kinds of money. We've got tax-advantaged money, whether it's after tax, we could do a Roth IRA, that would be after-tax money, or pre-tax money would be a traditional IRA, gold IRA. And we can do either one with a gold IRA. Gold IRA can be traditional with pre-tax money. It can be a Roth IRA. You can have a Roth gold IRA. So either type of money, before tax, after tax, you can use that in a tax-advantaged investment. Physical gold, after tax money, obviously that's you're going to go buy physical gold and store it under your mattress or wherever you choose to store it. So, and then that's number two. The next significant difference is, where is the physical gold stored? And then three, and this is an aspect that I don't think people focus on, is your ability to take possession of the physical gold, and that's important in my mind. So continuing with that topic, how to invest in physical gold. So if we look at, these are the different types of investments in gold, the type of money that we use for that investment, where the gold is stored, and then our ability to take possession of the physical gold. So in a gold IRA, that's tax-advantaged money. as a pre-tax, after-tax, but tax-advantaged money. IRS requires that the gold be stored with a third-party custodian, and just you can't get around that requirement. And then the ability to take possession. Well, we are able to take possession of the physical gold in a gold IRA when we start taking distributions from the IRA. We have a choice. We can either have the custodian send us the physical gold, or we can sell the gold and then take cash distributions. And so we are able to take possession of the gold in a gold IRA. Physical gold outside of an IRA, and of course, in my mind, this is the ideal way to own precious metals, whether we're talking gold, silver, platinum, palladium, doesn't matter what we're talking about. This is the ideal way to own precious metals. That's with after-tax money. Store it wherever you want, under your mattress, bury it in the garden, local vaulting facility if you're in a big city, lose it in a boating accident, but your choice of where you store that physical gold, and then ability to take possession of it starts the moment you buy it. As soon as you buy it, you walk out of the coin shop with gold and you got it in your hot little hands, and then a gold ETF or a gold trust, you can use either flavor of money to invest in paper gold. So tax advantaged, you certainly buy these paper vehicles inside a tax advantaged account, 401k, IRA, pension, whatever. Or you can use after-tax money, through a brokerage account. You've got a brokerage account at Fidelity or Schwab, whatever. You can invest in these paper gold vehicles. The physical gold, if we focus on the physical gold in a gold trust, that is held by a custodian, third-party custodian, and not because the IRS requires it. It's just that's how they store the gold. And then very unlikely that you will ever take physical possession of gold out of these paper gold vehicles, although they want you to believe that you can. They are, in my opinion, they are intentionally deceptive about these paper gold vehicles. They want you to believe that you can exchange your shares for physical gold. And as we'll see here in a couple of slides, it's simply not the case. But they want you to believe that that is the case. So just something to be aware of. Better to buy physical gold or a gold ETF? Well, I've already said, in my opinion, it's physical gold, after-tax money, take possession of it, store it wherever you want, it's yours. And you've minimized third-party, well, you've eliminated third-party risk, except that I guess the thief, the thief who might steal your gold from you, that would be a third party. So there's still third-party risk involved in outright ownership of gold, but let's not go there. So misconceptions about these gold-backed ETFs, gold-backed trusts. Well, the first one is that commonly people refer to them as gold ETFs. But if you dig into it, what you will find is an ETF does not hold physical gold. And if there are exceptions to this, please let me know in the comments. But as far as I am aware, all of the investment vehicles that hold tangible physical gold, they are trusts, not ETFs. But on the internet and in investment literature, you'll quite often see references to gold ETFs when in reality they are talking about gold trusts. It's a minor distinction, but something to be aware of. Gold trusts do not give you a claim on the physical gold. This is a legal distinction that in most cases would not matter. What you have when you invest in, for example, GLD, the Spider Gold Trust, what you have is a claim on the trust. You do not have a claim on the physical gold that the trust holds. And that's an important distinction, although it would only be relevant if someday you ended up standing in court in front of a judge. And what the judge would tell you is, well, yeah, you got a claim on the trust, but you don't have a claim on the assets that the trust holds. Where that might make a difference is if the trust went belly up, declared force majeure, went bankrupt, whatever, the best that you could hope for would be to be cash settled, that they would reimburse you for your loss in cash. They would not mail you physical gold out of the gold-backed trust because, again, you don't have a claim on that physical gold, the asset that the trust holds. Again, minor distinction, but something to be aware of. And then number 3, it is not possible to redeem the shares of these gold-backed instruments for physical gold. Although, again, they want you to believe that that is the case. And that's what I'm getting into now. There are 2 significant hurdles that stand between you and your ability to get physical gold out of these gold-backed vehicles. The first one is you have to be an authorized participant. And in most cases, certainly if you look at the Spider, whether it's GLD for gold or SLV for silver, you have to be an authorized participant. And if you're sitting there wondering, well, what is an authorized participant or how do I become one? Let me just tell you, you aren't an authorized participant, and it's very unlikely that you will become one. Typically, these are investment banks, hedge funds, gold banks. Anyway, unlikely that you will become an authorized participant, and so you'll never be able to redeem your shares for physical metal out of, again, GLD, SLV, and most of the gold-backed vehicles. There are exceptions to that. With all of them, they require that you redeem in large blocks of shares. It's not onesie-twosie. It's, oh, I'm going to take 10 shares of Fizz, that's the Sprott Gold Trust. I'm going to go redeem 10 shares for a couple of grams of gold. No, that's not the way it works. Here in the next slide, we'll see that. So these are the 2 most common gold-backed trusts, the Spider Gold Trust, GLD, and then the Sprott Gold Trust, which is Fizz. So Spider does require that you're an authorized participant. And again, if you aren't one already, very unlikely that you will ever become one. The Sprott trusts, and it's true whether we're talking about Fizz or their silver trust, they do not require that you be an authorized participant. But they have a very high threshold for the number of shares that you have to redeem before you can take possession of physical metal. So in case of Fizz, it's enough shares to be equivalent to 1 good delivery bar, which is 400 ounces, about 400 ounces. And so the value of that is $1.06 million. That was Friday's close, Friday last week. So unless you have $1 million worth of shares in Fizz, you're not able to redeem those shares for gold. And then the redemption threshold, even if you were an authorized participant, to redeem your shares of GLD for physical gold, it's 100,000 shares. That's $24.5 million, which is, it's about 10,000 ounces of gold. So number one, I'm guessing that if you're watching this video, you don't have $24.5 million invested in GLD. And 2, you don't want to take possession of 10,000 ounces of gold. If I'm wrong, kudos to you. So, and what are you doing watching my video? So, better to buy physical or gold ETF. I've already said, ideal way to invest in gold is to buy physical, store it in the location of your choice. That's ideal. But it's not always the best option because of tax advantage. If you've got money in a tax advantaged retirement account, the penalties for pulling that money out early, before retirement are very high. 10% early withdrawal penalty right off the top. That's a big hurdle. And then you have to pay income taxes. So any money you pull out of your retirement savings, you're going to pay income tax, whatever your current tax bracket is. And so very, very expensive to pull those retirement savings out and use that money to go to your local coin shop and buy physical gold. So limited options for buying gold with your tax advantage savings, other than a gold IRA. I mean, that's the only way you can do that is through a gold IRA. So this is, again, we're back to understanding the difference between having exposure to the price of gold. I'm invested in a paper vehicle, and I'm hoping that as the price of gold rises, my paper investment in gold will also rise, which is a reasonable expectation, but it's not always the case. And just for one example, if you're investing in mining stocks, well, mining stocks don't always follow the price of gold. There's a lot that can go wrong in the mining industry. It's a high risk industry. And so, gold could be, to the moon, Alice. And you're sitting there holding mining stocks that aren't going anywhere or perhaps even going down in price because bad things are happening to the company. So anyway, paper investments in gold give us exposure to the price of gold. They do not give us ownership. And then again, ideal way of investing in gold is to take your after-tax money and go buy physical, store it where you want. You own it, you store it. So, and that's, again, what is your objective in investing in gold? So be clear on that first. That's the first place to start. So, and if you are in the case of, okay, I've got money in a tax advantaged retirement account, I don't want to pull money out of that account, but I still want exposure to the price of gold. Well, what are my options? So first, and I've ordered them in order of choice. First would be gold trusts. These are the gold-backed GLD, FIZ. There's a handful of trusts that hold physical gold. That would be the first choice if they're available. Very limited options in typical retirement accounts, 401ks in particular. It's whatever the director of the 401k program at your company chooses to make available to you. And it's very unlikely that they're going to make GLD available in your 401k account. If I'm wrong, please let me know. I'd be surprised, but please let me know. Gold ETFs would be next, and those are ETFs that they invest in the shares of mining companies. And then perhaps you've got access to individual stocks. And if that is the case, you can invest in the major mining companies or ideally the large cap royalty companies, Wheaton and Royal Gold, those two vehicles in particular, and then the large cap producers, Newmont and Barrick. So at one of my jobs, I'm an engineer. That's my background, 30 plus years working in the industry. And one one of my jobs, I did have a self-directed 401k. And so ask at your company, find out who the 401k director is and ask if there is a self-directed option where you can invest in individual stocks, and then you'll have access to these. But again, that was one time out of my 30 plus year career. So, and then gold mutual funds, that is more common, although still unlikely that you'll have a gold mutual fund in your typical 401k or IRA through your work. Almost certainly there will be at least one commodity mutual fund or growth. That would be I didn't list it, but that would be the next choice, is some kind of growth mutual fund, and it will probably have some minuscule exposure to gold through the mining companies. And again, mutual funds do not invest in physical gold. They invest in the shares of mining companies. We'll see some of the things that they invest in coming up here. So physical gold versus gold mutual funds. This is what I was just saying. The mutual funds, they invest in the mining companies. They do not hold tangible assets. So you're not going to find a mutual fund that invests in physical gold. And if you're aware of an exception, please let me know in the comments. But as far as I know, you're not going to find a mutual fund that invests in anything tangible. It's all going to be paper. And so they provide exposure to the price of gold. They don't provide ownership. And again, this is what I was saying. So you could be invested in a gold mutual fund or or a gold ETF that invests in mining, the shares of mining companies, and you're watching the price of gold go higher, but your investment just kind of sits there. And how do I know this? I've been there, done that, got the t-shirt, and it's very frustrating. And there's a couple of reasons that occurs. One of them I've already mentioned. There's a lot that can go wrong with mining companies. And then the second thing is that these paper investments in gold, they're sucking off fees. You don't see it because they're taking the money directly out of the ETF or out of the mutual fund, but they are paying a manager. If it's one of the gold-backed trusts, they're paying for insurance and storage, the vaulting of the physical gold. And again, those fees come straight out of the trust. You don't get a bill for storing the gold in GLD. But trust me, you are paying. That money is coming out of your investment. You are paying for the insurance and storage in a gold-backed trust. You just don't see it. So gold mutual funds, commodity mutual funds, these are they are the last choice, in my opinion. So, and let me say that here. I am not a financial advisor. I'm not an investment advisor. I can't give you investing advice. Everything I'm sharing here is simply for your edification, help you make your own decisions. You have to do your own due diligence. And so please don't think that I'm giving investment advice. I am not. So the gold mutual funds, commodity mutual funds, these are the kind of things they invest in. And again, I'm ordering these in best to worst, if you want to put it in those terms. So mining stocks, the stocks of companies that mine precious metals, the ETFs. So the ETFs that invest in the mining companies, that's one of the things that might be inside of a mutual fund. But then you get into a whole bunch of them. They've got really, in my opinion, esoteric things, derivatives, swaps, options, futures, options on futures, debt securities, a whole bunch of, not only are they paper investments, they are, in my opinion, high risk investment vehicles. And so, you're investing in mutual funds thinking that, well, these are low risk investments. No, no, they're not. When they're investing in swaps and derivatives and futures and options on futures, those are not low risk investments by any means. And yeah, anyway, just be careful. It's funny, as I was preparing for this video, I was thinking, it's like making sausage. In a lot of cases, you don't want to know what goes into the sausage. And this is certainly the case. If you dig into these mutual funds and find this kind of stuff, this is those are the ingredients that you just as soon not know about. So paper gold versus physical gold, and this we've been touching on this throughout. So paper gold, which is kind of a weird term. What does that mean? Paper gold, there is no such thing. Well, paper gold, it's when we're talking about ETFs, mutual funds, trusts, basically these are all paper investments that give you exposure. Again, they give you exposure to the price of gold. They do not give you ownership. You're never going to take physical ownership of gold by investing in these paper gold investments. As I've said, the literature and the way that these vehicles are talked about is intentionally deceptive. They want you to believe. They want to paint the picture, give you the illusion that you are investing in physical gold and that somehow you could take possession of physical gold through these paper vehicles. And it's simply not the case because, again, as I said, two significant hurdles: authorized participant, and then the size. Even if you were an authorized participant, the number of shares that are required to redeem for physical. And so, again, in my opinion, intentionally deceptive, these paper vehicles. And then this is a key point, in my opinion, to understand. Financial advisors and investment advisors, most of them, are paid when you buy paper investments, whether it's stocks, bonds, mutual funds, ETFs, whatever. They get paid by getting you to, that's what I was about to say. When you invest in paper assets through your financial advisor, your investment advisor, they get compensation. And so if you are going to a financial advisor or an investment advisor and you are asking them about how do I invest in gold, well, they're probably going to start with, oh, that's not a good investment. And they'll talk about barbarous relic and risk and any number of things, try to steer you away from investing in gold. And then even if they do acknowledge that there is a place in your investment portfolio for gold, they will steer you towards the paper investments in gold because, and this is key, they don't get paid when you go to your local coin shop and buy physical gold. They don't get a cut from the coin shop owner when you go buy physical gold. And so they aren't going to give you that advice in almost all cases, unless you are paying an investment advisor for his time. He's not gaining compensation by selling you something. He's being compensated because you are paying him. And in that case, you might get unbiased advice. But just be aware that most financial advisors and investment advisors, they have a bias. And it's how they get paid. That's where their bias comes from. So let's focus for a few minutes on gold IRAs in particular, the pros and cons. A gold IRA account, this is the only way that you can invest in physical gold using your tax-advantaged money. If you have tax-advantaged retirement savings, you can roll that money into a gold IRA and then purchase physical gold. Now, as I pointed out, you won't have immediate possession of that gold. You have to wait until you start taking distributions out of your IRA, and then you can distribute the physical gold. Gold IRA represents a diversification of your investment portfolio in two aspects. So you're diversifying away from the traditional investments, the 60-40 portfolio, which, stocks, bonds, mutual funds, ETFs, etc. So you're diversifying away from traditional assets into precious metals. You're also diversifying away from paper investments, because everything in your 60-40 portfolio, all of that is paper. And paper can go poof very easily. The value of paper can go poof very easily. And so a gold IRA lets you diversify away from paper assets into tangible assets, physical gold, physical assets. All the same tax benefits as a traditional IRA, all the tax bennies, they're the same. Well-established history. So if we look at the history of physical gold and silver, thousands of years as circulating both stores of values and circulating currencies, both gold and silver. If we look at stocks, bonds, stocks and bonds, it's a couple of hundred years. And then mutual funds, ETFs, it's decades. Those are new vehicles. So hundreds of years of history with stocks and bonds, thousands of years of history with silver and gold. When you withdraw from your gold IRA, you have a choice. You can distribute physical metal, or you can sell the metal and distribute cash. So the cons, the downside of gold IRAs, and this is the key one for me, it's the IRS requirement that the gold is held by a third-party custodian. You don't get to keep it in a vault at home or buried in the garden, or wherever you want to keep your gold. The IRS requires that a third-party custodian holds that gold. And as I pointed out at the start of the video, I'm watching my timer, that represents risk. That's where the risk comes into a gold IRA investment. It's this third-party custodian. So there are fees. So gold IRA, you're going to pay fees to vault and insure that gold. But as I pointed out, gold-backed trusts, it's the same fees. It's just you're not aware of paying those fees, but you are paying them. They get pulled straight out of the trust. You don't receive a bill. In a gold IRA, you will receive a bill for insurance and vaulting cost. So that's a difference. And another, when we're talking about fees in gold IRAs, and this often gets ignored. When you invest in mutual funds, there are fees there, but again, those fees get taken directly out of the mutual fund. You don't get a separate bill for the money manager who's managing the mutual fund. But trust me, you are paying them. And so quite often when you look out on the internet, if you're investigating gold IRAs, you'll see people talking about the fees in a gold IRA and implying that there are no fees in investing in paper assets. And that's not the case. Again, mutual funds, there are fees. You just don't see them. So they're easy to overlook. Typical mutual fund, you're paying about 0.5% per year in fees. That's an average. High is 2%. You may be paying as much as 2% per year. That's high. You better have a good active manager if you're paying 2% on a mutual fund. So brokerage fees, buying and selling. Now, this certainly is a difference. You pay a broker a fee when you buy precious metals, you pay a broker a fee when you sell precious metals. And so those are fees that don't exist with paper assets. They do exist when you're investing in precious metals. And that's true whether it's a gold IRA, your local coin shop, where your online broker, wherever you buy your physical precious metals, you're going to pay a brokerage fee. The IRS does not allow you to take the gold that you already own and move it into your gold IRA. All of the precious metals in a gold IRA account have to be purchased inside of that gold IRA account. In conclusion, hopefully I've clarified the difference between paper investments in gold and tangible investments in gold. And the key difference is with paper, you get exposure to the price of gold. With tangible, you actually get ownership of physical gold. So key differences there, exposure versus ownership. And then again, the ideal way to own physical precious metals is to take your after-tax money, go to your local coin shop and buy gold and silver. I'm a silver bug, so I say silver, but gold and silver since we're focused on gold here. If you're interested in gold IRAs, if that's an investment that you think might make sense for you, I've investigated a number of gold IRA companies. The best company I've found by far is Augusta Precious Metals. In the link below this video, you'll find a link that will take you to Augusta Precious Metals. They've got extensive resources available you can invest that they will provide to you to help you investigate whether an investment in a gold IRA makes sense or not. They've had zero Better Business complaints in all of their years of business. They're just an outstanding company, and certainly compared to the other companies that I've researched, Augusta is the best. And so again, if you're interested in exploring gold IRAs as an investment for your tax-advantaged money, follow the link in the description below. That's all I've got in this video, folks. So let me stop sharing my screen and I'll end this video. Talk to you soon.